Now.
Okay, I'm gonna hit go live.
Welcome back, everyone. I am Cass Piancey. I'm joined as usual by my partner in crime, Mr. Bennett Tomlin. How are you today?
I'm doing good, Cass. How are you?
I'm tired. I'm so tired. And we're getting hit with the usual kind of disruptive nonsense and technical difficulties right before we go on. But let's talk about what's been going on. It's been a hectic couple weeks. It's been a lot of drama and a lot of uncertainty. I think not FUD, but uncertainty, we will say. Where do you want to start?
Well, okay, let's just summarize a little bit at the top of this. FTX and Alameda Alameda was using FTX customer funds to gamble on cryptocurrencies, made a whole bunch of bad bets. They collapsed, taking out FTX with them and sending Sam Bankman-Fried's entire cryptocurrency cartel into bankruptcy. That's where we're at now. During that period, we've now discovered a bunch of interesting information about how FTX and Alameda were banking. At the most basic level, we've even had Sam Bankman-Fried admit that Alameda was regularly used to bank FTX, meaning that Alameda was where they were accepting deposits, is what Sam will publicly admit to. But Alameda is also where they were sending out deposit or withdrawals from. And so there was this definite commingling of funds between Alameda Research and FTX in order for them to be able to comfortably maintain banking. During this process, there was one specific bank that you've written a little bit about. So, Cass, why don't you tell us a little bit about the bank you have covered?
Well, I do want to add from what you were saying just now that the statements made about this to me, and I'm not a lawyer, you're not a lawyer, but the statements made about the commingling of funds and where the money has been sent to and from, it sounds like wire fraud and it sounds like bank fraud. I'm not a lawyer, so maybe it's not. Maybe I have no idea what I'm talking about, but it sounds like you would have to be lying about where the funds are coming from and how you receive them to be doing the things that they were doing. So I do want to just kind of state that on the record. It looks like that to me. That doesn't mean that's what it is, but that's what it looks like to me. And then, yeah, we're looking into, you and I and others have been looking into more than just this one bank. It's in the bankruptcy filing, there was 32 banks listed, I believe. 32 banks and lenders and other parties involved with Alameda. And was that just Alameda? Was that list just Alameda, or was that list FTX as well?
That list was the combination of 130 entities that comprised the FTX enterprise that ended up going bankrupt, and these were the banking relationships for all
Right.
of those.
Right, and the bankers include, the normal names that we've come to expect in this space. So, for instance, I think everyone who follows the Tether stablecoin drama is familiar with Deltec, because that's the bank of choice for. And I'm getting into the weeds a little bit here because I think to tell the story of this little bank that we're about to talk about, you do have to kind of understand the back story here, the history. Deltec has been around for a really long time, I think 75-ish years or something like that. Old school offshore bank listed heavily in the Bahamas papers, associated with, all kinds of, the Panama Papers and the Bahamas leaks are associated with a lot of tax evasion and a lot of money laundering. That doesn't mean necessarily that I'm suggesting that's what these banks are guilty of, but they are one of the top listed banks in the Bahamas leaks, Deltec. Deltec is run by a gentleman, or not run by, he is the chairman of, so take that as you will. He's the chairman of Deltec Bank, the bank that does banking with Tether, and also was a banking partner for FTX and Alameda, right?
Yeah. So Deltec Bank was one of the banks for both FTX and Alameda. And sorry, before we go on, Cass, you might want to turn the gain on your mic down a bit. You're coming in a little hot. But yeah, so Deltec Bank and Trust is the bank for Tether in the Bahamas and has been banking both FTX and Alameda. Um, and so, yes, and then as you were saying, Deltec then went out and found this other little bank.
Yeah, well, we're talking about a bank called Moonstone now. It was formerly, hopefully that's a little better. Are we okay now?
Yeah.
Yeah. Okay. Yeah, we're talking about a little bank called Moonstone. It formerly was known as Farmington State Bank. When we say small, it's like one of the smallest banks in the entire country. Apparently, there was about $10 million in customer deposits there at the time that it was purchased. There's kind of conflicting evidence as to, I believe the purchase was in 2018, but he finished following through with the entirety of the purchase in 2020. Regardless, the company that purchased this tiny, tiny bank in rural southeastern Washington state was a company called FBH. Now, FBH is owned by Jean Chalopin, who is the, again, chairperson of Deltec Bank and Trust in the Bahamas. So now he is banking Tether and FTX and Alameda, and he's purchasing a bank in the United States. After he purchased it, it was a state chartered bank. I hope people understand there's like a difference between, so like a state chartered bank generally is taking on like super minimal risk, is only working with local businesses and local individual, probably only within state for the most part. They're not doing a lot of international wire transfers. They're not doing a lot of the stuff that basically the Federal Reserve requires you to check in with them if you want to be doing this stuff. They were almost exclusively regulated by the the FDIC and the Washington State Department of Financial Institutions. As soon as Jean purchased it, he basically made it his mission to get it Federal Reserve regulated as opposed to state chartered. And the reason for this was obviously so that he could connect up I'm not going to say obviously, but I think it's to make it an international business, an international banking business, no longer just for the rural individuals of southeastern Washington state. Again, I'm sorry that this seems like it's so long and complex, and ultimately, he got his Federal Reserve regulatory licensing and was allowed to do this. And one of the first things they did when they changed their name to Moonstone, which by the way is a combination of to the moon, like an asset class going to the moon, and stone, like stoned, smoking weed, because their two product offers are digital assets and cannabis. So basically, as soon as they get this done and this Federal Reserve regulatory framework done, they accept an investment of $11.5 million from Alameda Research. Now, I think in the scheme of things, especially for everybody who's involved in the cryptocurrency industry, $11.5 million really doesn't sound like anything, because it isn't. It's really very, very little. But for a tiny bank, a one building bank in a town of 140 people, where that investment actually matches customer deposits at the time, it's a lot of money. And not only is it a lot of money, the important point here is that it was for a 10% minority stake. And what that does is that balloons the value of this tiny bank in Washington state. So now who knows what it was worth? I mean, the revenues that were reported were like $60,000 or something in the years leading up to the purchase. It's now valued at $115 million, which is a steep valuation for a tiny little bank in southeastern Washington. But the second part that's really troubling about this is that as soon as this investment was made, suddenly deposits in the bank shot up from 10 million to 80 or 85 million. All at once. No, the Bank Secrecy Act, they cannot disclose who those deposits were from. But I think the general public seems to be under the belief that who else would it be besides possibly Alameda Research and FTX? And that the question now becomes quid pro quo. Like, are you not doing suspicious activity reports on these customer deposits? I mean, they could, these are again are not things that we would ever be able to possibly find out. But these are real questions that I think the public has now at this point.
I think the more interesting point here is kind of why this was necessary, right? Because if we believe that it is Alameda Research and FTX who made up this sudden bulk of new deposits that suddenly came in from like what a total of 4 accounts or something was the reporting. If we assume, let's just assume for now that that's largely SBF related. The question is, why did they need to go find this other bank in order to have banking access or banking for these assets? Because presumably they should have had active and good relationships with other banks where they were being fully forthright about what was going on, and they should have had that continued access to banking. Them going out and seeking this incredibly small rural bank that was, as you mentioned, doing like 60K in revenue a year and valuing it immediately at over $100 million seems like they really were looking for access.
It feels like an access point to the federal. And by the way, I want to point out the Washington State Department of Financial Institutions admitted that of all the banks that are dealing with cannabis businesses and digital asset businesses, the only one that is under Federal Reserve guidelines is Moonstone Bank. It's the only one in the state of Washington. It made me scratch my head. That doesn't mean there's anything malicious going on. That doesn't mean that there's anything wrong going on or that any illegal activity has taken place. But it makes you scratch your head and go like, I'm not exactly certain what's going on here. And we should keep peeling back this scab to see what's underneath.
Well, and I think we should talk briefly about Deltec. And we've probably talked about Deltec before in some of our early episodes when we were talking about the past of Tether. But for those who are unaware, it is a relatively unassuming, or at least it was a relatively unassuming Bahamian bank. I always struggle with that word. And back in like 2016, before Tether started banking there, before their new CEO at the time took over, I want to say it had like 16 to 19 million in deposits, right? So let's say double Moonstone Bank, but still not a major bank, right? And then we see its capital structure change around the same time that Tether starts banking there in 2018, with them leaving the Asian Isla group and coming under some new ownership structure, which is a little bit harder to discern. They launched Delchain, their cryptocurrency-focused offshoot, of which Paulo Arduino, the chief technical officer of Tether, used to be an executive director for. They launched their cryptocurrency hedge fund, Fulgur Alpha, onboard it onto Bitfinex, and then Paulo stops being a director at Delchain. There's all of these transitions happening for Deltec in 2018. They launch this new cryptocurrency offshoot. They start banking Tether. Shortly after that, they start banking Alameda Research and onward, and eventually they start banking FTX as well. 2020 comes around, and then we get to Moonstone Bank, where we see Deltec, the group that started just a couple of years ago at like less than $20 million in deposit, now going out and seeking a bank that was of roughly the same similar class of size as it in America, purchasing it from another foreign national, and then watching its valuation immediately explode to something greater than $100 million, thanks to the investment of Alameda Research, who is also being banked by Deltec down in the Bahamas, where FTX is operating. FTX needs a bit of social and political capital. And so these entire series of transactions that are happening here are still somewhat opaque, but from what we can tell suggests that the interactions between these companies and the steps they need to take to maintain banking are more significant than some people have recognized.
And in a Protos piece today, it's called Washington Regulator Doesn't Need New Laws to Stop Bad Guys in Crypto. Maybe people who didn't scroll all the way down to the bottom might have missed it, but a former regulatory lawyer said simply, the SEC, the CFTC, and FinCEN have been warned time and time again about the risks of Deltec. And I think that there's probably a lot of former regulators and regulators out there who are equally frustrated with this situation, as we are, if not more, because perhaps there are not the laws and rules and regulations in place for them to do what they want to do. On the other hand, I think it's important to point out that Protos also spoke to the Federal Reserve this past week, and their excuse was, well, sometimes we screw up, and I don't know. It's nice to hear them admit that, I guess, on one hand. On the other hand, that doesn't instill anybody with a bunch of confidence, does it? Like, it's not saying, oh, we acknowledge we made a mistake. Here's how, and here's how we're going to fix it. It's, well, oops, boys will be boys. And you're just like, what? Like, yeah. So I think we're looking at truly a systemic regulatory failure here. Truly, I believe it.
Yeah. And so there have been the conversations with the Federal Reserve about the approval of Moonstone, about Moonstone becoming a Federal Reserve regulated bank. There was the conversation with Washington DFI. And broadly, I think there's a few classes of problems here when we're getting into regulators. And there's like a couple of things I kind of want to address. Because besides those two, there was another regulator who made comments recently that made me incredibly angry. And that was Chairman Benham, Rostin Benham, the chairman of the CFTC, made a comment where he said that FTX looked like a classic bank run, a liquidity crunch. And that made me angry because FTX is not a bank, and that is not what was going on. It was not just a liquidity crunch. Alameda was exempted from liquidation. Alameda was getting positions they could not without special exemptions. FTX and Alameda were intentionally commingling assets. There was these loans against related party assets in order to maintain this fiction. The chairman going out and saying that revealed that he had not spent the time to understand even the basics of what had been publicly reported about the FTX thing so far, beyond whatever other information the CFTC and its staff may have. It was malpractice, basically. It is your responsibility to understand these things, and making a statement like that, suggesting it is a class of failure that the public reporting already says it was not, is embarrassing from a regulator. And I think that's kind of what we're seeing here, is that many of the regulators are doing an embarrassingly bad job at seeing through what they're supposed to. And some of the others are hamstrung by the lack of political will or resources or desire to actually even try to regulate.
I think that's all correct. It's such a difficult systemic issue, because it's almost like you don't know where one systemic issue ends and another one begins. Like, is it politics and lawmakers, or is it regulators who are being lazy, or is it that, I mean, one of the I don't know if it was reported in the story or not, but the Washington Department of Financial Services, or financial institutions, one of their consumer services representative basically said that they expected consumers to read the fine print. Like, if they didn't read the fine print, that's why they got messed up with on BlockFi, which had been given license, like money transmission licenses, etc., in the state of Washington. And I was like, hey, you and I, we know when BlockFi is offering 12, 15, 20% APY on these stable coins or this whatever, it's not only is it unsustainable, but like, it's a business model that's doomed to make this business fail. And I can say that confidently now because they've declared bankruptcy basically twice or three times, or who's keeping count anymore. So I think the fact that wasn't caught beforehand by these regulators, like, it's already ringing alarm bells to me. And then for them to write off, like, well, they should have read the fine print. It's like, well, no, maybe the fine print shouldn't be fine print. Maybe the fine print should be bold and accurate and fair for all the consumers, so they know what they're getting themselves into. And the regulators, the lawmakers, I don't think this is even on their radar as like a possible solution, which is just, I don't know, it's mind-boggling. I don't know who's failing hardest right now. I guess it's hard to try to cover who's failing hardest besides like SBF.
Yeah, well, and like we've kind of talked about, some of the challenge here is that like there is kind of a lack of political will. There is not a broad consensus among our lawmakers or even our populace that it should be a thing that our regulators actively go out and regulate these markets. And so without that, even when they have the laws on the books, it can be challenging for them to go out and do it. However, even saying that right now, as I'm saying it, it feels like a really weak excuse because like often what you end up seeing, and like I'm thinking of, I'm blanking on the name, but the director of the Mint who started like the state quarter program, um,
His first name is Philip. I
Philip
don't.
Deal, right?
Yes,
Dial,
that's right.
Dial,
Yes.
yeah, and so that position wasn't ever imagined as like what he made it into, but because he was willing to go out and try to do something with it, it became a much more meaningful thing and really kind of changed the Mint's position in the government under his care. And so I think that while I'm saying they don't have the political will, there is kind of this part where when the public sees you going after the bad actors and taking steps to do these things, you can start to create virtuous cycles where the political will comes from that done well. Because there are people who are clearly frustrated at the abuses of power and privilege that they see all around them every day.
That's right. And definitely some of this, I think, is as we continue to watch all of this unravel and untangle, some of this, it's becoming clear, you know, there were red flags years ago. There were red flags a long time ago about this. There's people trying to spin it like no one could have possibly known. Like, oh, there's people who talk bad about others who did ask the right question 2 or 3 years ago and say they just are constantly fudding. And it's like, well, actually, the question of like how much separation between Alameda and FTX is there and how can you prove it? Wow. Well, that seems like a really poignant question now, doesn't it? It seems like anyone who said I'm not going to trust them because it seems like they have a trading desk directly trading against customers. I mean, wow. Well, that seems like it was obviously true now, doesn't it? So I do think that it's easy to write off these old questions, but when we're slowly untangling the scope of this, it becomes clear that this has been going on for a really long time. And I know you and I have both been working on trying to untangle some of this mess. Can you talk about this process?
It's been challenging. I've started working through like some of the banking partners and the entities that have declared bankruptcy, trying to trace like overlapping directorates and things like that. And this entire thing is a mess. And there is one specific example I want to talk about because it brings us back to the issue of how they were maintaining banking and directly connects to how interconnected these entities were, their finances were, and how much Sam Bankman-Fried personally was involved, despite his claims all over everywhere that he was not. And so one of the examples I'm going to talk about is a small Australian over-the-counter trading desk called HiveEx. And this small little over-the-counter trading desk started in 2018 by Fred Shibesta. Fred Shibesta then, after he started this desk in 2018, went out and purchased a roughly 10% stake in the local bank, Goldfields Money, which was a great bank because it had access to some broader payment system, yada yada. So it was a small bank, but it was valuable because it had the connections to the payment rails they needed, if that sounds familiar. HiveEx, the small Australian over-the-counter trading desk, then announced a service where they would help bank ICOs and started advertising their ability to bank ICOs. One of the executives on their team was even had the title, his title was bank brokering. That was what he was in charge of, or bank account brokering was what he was in charge of. Now, brokering is generally the process of like buying and selling. And so I'm not really want to know what bank account brokering is, but that was his title. August of 2020, Sam Bankman-Fried, and yes, Sam Bankman-Fried and Alameda Research come in and purchase this over-the-counter trading desk for 300,000 in Australian dollars. And I'm sure absolutely nothing else in any other consideration that was not reported to the Australian authorities. So that's about 200,000 USD. He buys this trading desk that had this nice banking relationship thanks to the purchase of the trading desk co-founder. And then, well, it's still under the control of Alameda Research, FTX starts advertising that they can now accept deposits through HiveEx, because of course all of these were interconnected. The money was moving through all of them. And Sam Bankman-Fried was personally made director of HiveEx after and while it was still under the ownership of Alameda Research. Oh, sure, Sam, you had no idea what was going on while you were being made director of the companies they purchased in order to bank FTX. You fucking liar! Oh.
It very much begins to feel like you're Charlie and Pepe de Silva, or whatever it is, Pepe Silva, whatever. The classic meme of Charlie from It's Always Sunny, and you're pointing to all the entities, and all the circles are matching up and going here and there, and people are like, I don't really even care to know about this complex net of lies. But it is that, I mean, yeah, it's really intense. I've been trying to simply unravel kind of some of the exposure that some entities might have had to Alameda, whether it's from investments or from, you know, let's just give an example of, say, they were the insurance company for them or something like that. So like these entities themselves are then connected to things like Deltec, or connected to things like, and Deltec Bank and Trust, of course, is owned by Deltec International Group, and you know, Del Chain is a subsidiary of Deltec Bank and Trust, and like we can go on forever, and we're not going to get to the bottom of it. And these are all slippery folks who aren't going to tell us anything that we want to know. I've reached out to Deltec a bunch. If they want to come on our podcast and chat, I would love to have them. I would love to have Jean Chalopin, or you know, our good friend Greg. I know he did the Laura Shin podcast. I haven't seen him around much since then. Please come on, hop on with us and chat. I'm super interested in Deltec.
Listens?
Yeah, I'm sure he does. I'm inviting both of them. They can come on together.
You ready to talk about the insurance provider, though?
Jean Chalopin has done podcasts where he is a sponsor of the podcast. So I know he does podcasts as well. So if he doesn't even have to sponsor us. Like, come on in, John. We want to talk, man. I want to know more about your gigantic conglomerate banking thing in the Bahamas. I'd love to hear more about how you did this, how you've controlled this interest and bank Tether when no one else could. I think it's amazing. I would love to know all about it. So open invite to those folks, those good folks over at Deltec. Obviously they're not going to, but I think that the frustration you hear from both Bennett and I, whether it's about Sam Bankman-Fried getting a media parade, and trying to spin this obvious narrative of, well, I'm just a stupid fucking moron. Doesn't everybody see that? I'm just a fucking idiot. I went to MIT. I graduated. I worked at Jane Street. I understand all of this stuff about trading and derivatives and margins, and I know all about it. I'm a fucking moron.
Proprietary model that allowed Jane Street to profitably trade ETFs even when those ETF markets themselves were closed. But I'm a dumbass. I don't know what risk management even means. Co-mingling? What's that?
By the way, there was a really nice article today by Zeke Fo of writing for Bloomberg, and I urge everyone to check that piece out. That was, I think it was a really well written and humble piece, because Zeke admits in the piece kind of that he had been fooled as well, that he had gone there and been like, maybe this guy is like for real. Maybe this effective altruism thing is going to work. And, you know, he wrote this article going and visiting him in the Bahamas and just kind of being more like skeptical the whole time. And it's nice to see that. That's the turn I'd like to see from these media outlets. You know, I guess it's good that he did the New York Times thing. Andrew Ross Sorkin did ask good questions. Thank God. I think nobody was necessarily expecting that. Thank you, Andrew, for doing the right thing. And then the GMA one was just so strange. So strange. But again, the right questions were ultimately asked, and he didn't look good. Now, does he look kind of stupid? Do I perceive him as like, I do think that this is like playing into the stupidity defense and possibly like, I don't know, maybe he'll go for like a like drug psychosis defense or something. Like there's something weird going on where he's like, I'm not listening to any lawyers. I'm not listening to my parents who were like professor lawyers. And I'm not going to do anything that anyone expects me to do. Maybe because I'm fucking dumb and crazy. So I think it plays into that a bit, which is unfortunate, and is why I think if we could cool it with all the SBF interviews, that would be really nice.
If you're going to do one, if you must do one, please, please do your preparation beforehand and make sure all the people you invite to be a part of whatever kind of interview you're doing are similarly prepared and ready for what this type of interview entails. Please, not referring to any of the interviews in specific that might have been really, really fucking bad, but hey, just a broad recommendation.
Yeah, I know. And you look, I know a lot of people have been slamming the media left and right for their bad takes, and I think it's fair. It's fair to kind of look at some of those early takes about him. I think the narrative has shifted. Like I think it's more or less become more like a, oh, okay, he's just a alleged fraud.
Yeah, at the very
So
least, it's shifting. And listen, all of us in crypto are pretty deep into crypto. Anyone who's listening to this podcast knows like several standard deviations more about cryptocurrency than the average politician. And like several standard deviations more than the average like newspaper columnist or whatever. It's going to take a while for like the information to diffuse from those who know what's going on to those who write about what's happening. And so I'm hoping that those who write about what's happening put in an active effort to get up to speed on this, but just naturally, generally, for most things, that process takes time as that information diffuses. And I think we've already kind of turned the corner on Sam Bankman-Fried's possible redeemability. Like I think he has made enough, and like that's the other effect of his interviews is he has contradicted himself. He's contradicted previous interviews. He's contradicted statements of like the current CEO of FTX, John J. Ray III. And so like all of these contradictions will eventually, as the media takes time to process and integrate them, will come back to haunt Sam. It's just these processes sometimes take a little bit of time because the people involved are people and are deeply flawed.
do you want to give John J. Ray III an open invite as well? That one's
I,
for real. I'd much rather have him on than Jean Chalopin, but you know, both of them, either one would be great.
I imagine he's busy and probably can't talk about a lot of the things we would want to talk about. But hey, if you ever want to talk Enron, and we can even ignore FTX and just talk Enron if you want, John, come on.
Yeah. I mean, I think we're still waiting for the other shoes to drop. I don't think that we've seen the end of the contagion risk here, and the. I think basically we're at the time where anyone who can get away with not answering the question of, so how exposed were you to Alameda and FTX, will just avoid having to answer that question. Like they're just not, if no reporter asks them, they're never going to bring up that subject. So, you know, I know that citizen journalists, there's been a bit of a, I mean, look, BitBoy is not a journalist in any way. Let me just put that out there. Anybody giving him props for anything he's currently doing doesn't know the real truth about him and how he, for years, made money from ref links and shilling and betting on a bunch of bad projects that he dumped these tokens of on from, you know, dumping on his audience. So I just don't want people like BitBoy to be getting any traction as like saviors in this current reality that we find ourselves in, where everything seems messed up and there have been some sort of weird whitewashy kind of pieces from some mainstream media outlets in the past few weeks. Like, I get it. There's frustration. But please, let's not levitate people like him. Let's not levitate anybody. Like, I don't think it's worth putting anybody on a podium after this. I will give massive credit to CoinDesk, and I think it's really important to note that what happened here, I have no idea if it's because DCG is absolutely incompetent, or if they purposely built these Chinese firewalls between their companies, and they had no idea what CoinDesk was going to report. If that is indeed the case, props to them. That is awesome. I like really, truly, mad respect if they made sure that they never knew anything editorially going on at CoinDesk. Generally, I find that hard to believe, but maybe that could very well be the case. And if that is indeed the case, props to them for letting this story go out. It gives everyone, I think, hope that journalism has integrity yet.
I think it's quite plausible, just knowing the journalists I know over at CoinDesk and the editors I know over at CoinDesk. I think it's quite plausible that DCG had no idea what they were reporting. But it is kind of funny that now there's word going around that DCG may be interested in selling CoinDesk because CoinDesk might be one of the more valuable DCG properties left, which is not how I think Ian Allison expected this to go when he wrote a little story about what CoinDesk or about what Alameda Research's balance sheet looked like 4.5 months ago. I think he was just covering what he thought was, wow, this is strange. They're way over levered and on their sister company.
As scary as it is I think that the question kind of that journalists have been asking each other is like, isn't this kind of funny and weird? Like, isn't it kind of funny and weird that somebody essentially takes down their parent company? Like, that is not exactly what has happened, to be clear. Like, who knows what ends up happening with DCG? Who knows what ends up happening with Grayscale and Genesis and, all this stuff? Nobody knows. They could all ride it out and be totally fine. Maybe. But regardless, this was allowed to be reported. It was reported fairly, justifiably. It actually reminds me very much of the initial reporting on Enron, where it was, oh God, forgive me. I'm forgetting her name. Bethany
McLean.
Bethany McLean, thank you. Bethany McLean did the first story on it, and it mostly, I think the headline was, is Enron overpriced? I might be getting it slightly wrong, but I believe
like that.
Yeah. Is Enron overvalued? And Enron freaked out. All the executives freaked out. They were talking about how she didn't know what she was talking about. Well, I don't know if it was Wall Street Journal. I think it was Wall Street Journal that did that report initially. So they were just like, Wall Street Journal is so stupid. They don't.
I want to say it was a Heard on the Street column. I know that's how Jim Chanos ended up hearing about it, but I don't know if that was where Bethany originally published it.
Well, I know hers was, there were other things here and there, but like hers was the big one. And their reaction to that was so strong that people started digging more, and then everything came to light. And I feel like there was such a similar, basically, Ian Allison reported this story. It didn't get a ton of traction, and I remember you and me both being like, this seems fucking crazy. It seems like a huge fucking deal. I think Mike Bergersberg, too, kind of just like, I mean, he straight up was like, they're insolvent, which I think is like a bold claim at the time.
I mean,
ultimately, he was 100%.
I wasn't willing to tweet it yet, but yeah, you're absolutely right. Is there were people who like heard Carolyn go, "We've got another 10 billion of assets," and they were like, "Look at what are you guys talking about? They've got 10 billion more of assets," and we're all like, "What? You think they've got a separate balance sheet with 10 billion of accurately valued assets after you just saw how they bullshit their valuation on these assets? You're just going with that." There were a few people who just went with that.
That's right. And I think it was this slow roll. So like there was that initial story. There was people like us who were like, this seems way more important than anybody is taking it. Then there's people like Mike going like, it's straight up insolvency. And then there's the slow revelation of like the rest of cryptocurrency industry just being like, oh no, this is really, really, really bad, isn't it? No, this is horrible.
I think what's kind of really funny here, and not funny like haha, but funny like you fuckers did that to yourself, is that increasingly it seems like and this is going to be somewhat speculative, so don't take this as a literal description of events, but like Alameda and 3AC seem to have like both gotten some indication that the other was weaker than was like generally understood, and started like aggressively taking unprofitable positions in the hopes of like forcing the other into a position where they would break, and then there'd be a bunch of things available for the winning firm. And like eventually with Terra, one of them did break, but like from what I can tell, when that happened, they all realized that they had all the same counterparties, and they were both getting loans from the same people, and that they were both loaning to the same people, and that if one of them blew, the other blew. And so then Alameda takes more billions, because I think they'd already taken money out of FTX at this point, but they took more billions from FTX in order to bail themselves out and start trying to bail out all the counterparties that were involved in this little tit for tat game. And now that FTX has collapsed, we're realizing, oh, wait a second, all the companies we thought weren't exposed, at least half of those actually still were exposed, and we're just hiding it because Alameda was stealing in order to continue to fund the game. And so, like, they went to war and destroyed everything.
Yeah, there were no victors in this war. And that doesn't even get to, I think, some glaring questions from everybody that have not been answered, I think, in any real meaningful way, which are, hey, where did those billions of dollars fucking go? It's a pretty simple question. I don't think anybody has an answer to that yet. Even if it was lost in trades, where and to whom? So I think those are glaring questions. That's a glaring question that hasn't been answered.
Well,
but another one.
Wait, it's especially a glaring question when the current FTX CEO and team writes in their bankruptcy filings that they believe the co-founders of FTX, that'd be Gary Wang and Sam Bankman-Fried, are hiding wallets with digital assets, and that's part of why they don't have an accurate count of assets yet. Yeah, when you've got the current CEO accusing you of hiding funds, yeah, I think it's a very good question as to where did the money go.
That's are somewhere between $100,000 and $4 billion. You think that's a fair statement?
Well,
he'd mark to market at $4 billion, though. I know that.
listen. He'd market at 40, take a loan out for 8, recapitalize FTX, and get the casino going again.
Yeah.
There is.
What's the quickest? What's the quickest way to make $100,000? Like invest $40 billion with FTX and Alameda, right? It's that old.
Yeah. Back to my little tit for tat analogy. There is an interesting angle that's gone largely unnoticed. Forbes kind of gave it away today. There's some more stuff coming that'll further report this out. But like, Binance originally purchases a stake of FTX equity when they're first getting started, owns it, and then they eventually sell it. And some of the reporting said back to FTX. But the Forbes reporting today, and again, there's more to come, will reveal that it was not sold to FTX. It was sold to Alameda Research. Alameda Research was the entity that used largely FTX token and a little bit of BUSD in order to purchase back this equity from Binance. And the reason they were doing this is that FTX was applying for licenses in Gibraltar. And one of the things they had to do was give information about their largest shareholders to the regulatory body. And CZ refused to give any information to the regulatory body. And so FTX was not eligible to get that. And so what I think happened is that in order for CZ to keep his equity-like exposure but not actually be a shareholder, they basically made FTX token, like did the swap for FTX token so that CZ would still have the effective buy and burn rights that you get from FTX, the effective claim against that portion of the revenue without actually being a shareholder. Because it's not that they didn't want CZ involved. It's not that they didn't need CZ involved. It's that they couldn't have him and continue to pursue the broad slate of licenses they were hoping to get. And so because of that, they did this swap. And then when they had to bail themselves out, I think CZ got wind that they were using FTX token to do it, and he realized that his position, his stake in FTX was potentially in danger because there was this extra assets being spread out across the ecosystem. So then I'm not convinced it was malicious. I still think CZ might have honestly intended to sell that position over months or a year or even more as he de-risked it. But
hold on.
And this gets back to your reaction. No, this gets back to Enron. The reaction of Carolyn and Sam to the news that CZ was selling suddenly meant that, like, oh, they're bullshit. There's nothing here. And that meant there was blood in the water. And then everyone came out.
Reiterate that if there was no malintent, there's no reason for
That he would have announced it. Sure,
CZ.
you're right.
Yeah. There's no
Sure,
reason
that's
for him
fair.
to announce his largely illiquid position. He's going to be selling it out over months. It is, at the very is not that stupid. So I'm going to give him that much credit and say that he definitely
At the very least,
he was putting chum in the water to bring the sharks in the first place. So and whatever. I like that doesn't excuse fraud. That certainly doesn't excuse fraud. And I don't think anybody needs to suggest that CZ is the one who caused this. That is definitely not true. And I want to make it clear that neither you or I believe that. But he did his part.
Oh yeah. And when I say I don't know that CZ knew there was an $11 billion hole in the books. I think he gathered there was a hole in the books, and I think he might have literally thought this is my chance to buy out one of the more threatening competitors. Not that he thought like this is my chance to blow up the entire industry.
I think that's probably right. Yeah, what else is there? What else is there that we should cover? Is there anything you think we need to update people on? I don't know. I think a lot of the stuff swirling around now is just based on what Sam, like my policy now is that he's exclusively lying. And by understanding that everything he says is a lie, it kind of makes it so that there's very little reason to take anything he says to the media seriously or suggest it provides us any value other than one day seeing him go to jail because of these interviews. So for me, that story, it's not dead. It's certainly not dead. We're going to be covering it for years, I suspect. This story is not going anywhere, but I don't care about hearing from Sam anymore. I would really love to hear from Sam Trabucco. I would love to hear from Caroline Ellison more. I don't think she's spoken very much. I would love to hear more from Gary, and the other few tight-knit people in that little circle. I don't care about. I know other people are fascinated by like the sex stuff and the drug shit, and I think all the kind of recklessness definitely played a role. But the interesting part to me is hearing all sides.
In the sex and the romantic element, like insofar as it suggests there were not appropriate like controls and separations between these. I don't really care who Sam Bankman-Fried sticks his penis in. That's not a piece of information that's really that interesting to me. But like the fact that the person he was dating was the CEO of the firm he claims to have no idea what was going on about, that's pretty suspicious.
I mean, I think there's plenty of examples as to how broken this, whatever you want to call it, like company is even a difficult term at this point, because it was such a clusterfuck from, to me, what appears like from the very, very beginning. I mean, people have already stopped talking about that lady who co-founded it with Sam and then immediately left because of all the risks that she saw there.
Or the Ponzi like 2018 fundraising thing where they were promising like crazy returns and stuff.
Just don't get me started on that stuff, because then I just start thinking about Kyle Davies and Suzu and how they're trying to do this right, and how they're trying to be these. We're just seeing so many scammers try to elevate themselves. They're trying to be. We were martyrs. It's like they were martyrs for some greater good or something, and I'm just like, what greater good? You just lost money, idiots. I have no idea. Like, why would I feel bad for you, or why would I feel like you've done anything but hurt people? So I want to see less of that. I really want to see less of that on Twitter, but whatever. Twitter's a fucking nightmare anyway.
We should probably just spend less time on Twitter, period. It's probably the answer to that problem.
any questions or any, like, is there
Yep.
anything?
Let me
I don't
check and see quick. I got it open here. Cast, turn your
know.
mic
Okay.
down. Cast, turn your mic down. Yeah, 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 yeah. Let's see. Um,
Sounds like probably not much.
so there's a question. Astrobrick asked a question about the tokenized securities on FTX Europe. I have started the process of looking into that, but again, that's another one of those cases where you have pretty complicated interlocking directorates. It's like trying to track who had custody, who was doing redemptions, who was doing what has been challenging so far, and so haven't published anything yet, and don't have any strong opinions on that. Um, it seemed strange when I saw how some of the corporations that were involved in it were being passed from owner to owner as they like kept restructuring in Europe. But strange isn't necessarily criminal.
I do want to point out that reminded me of the Arthur G.B. Thomas, I believe is his name, Arthur G.B. Thomas of the Eastern Caribbean Securities like Commission or whatever
Mm-hmm.
it's called. Um, I tweeted out about him being a board member for FTX Malta, and I emailed them and specifically asked, "What's the deal with this guy?" And then they just emailed me back and said he no longer works for us. We've forwarded your email to him. And obviously I never heard from him, but I do think that what I'm pointing to is there was clear, it's going to become very obvious to people, I think, how much of a role not only FTX and Alameda, but these banks that are banking them and the people helping them move real US dollars into and out of the cryptocurrency industry are going to be shown to have worked hand in hand with regulators and lawmakers in countries like the Bahamas, which, okay, I'm sure there's a lot of people out there going, well, no shit, Cass. But I do think that this is like it's pivotal and it's worth pointing to. And people's reputations need to be damaged because of this. Like the fact that the prime minister of the Bahamas was hanging out. I get it. It's a small country or whatever, but like hanging out with him on stage and trying desperately to woo this guy to the Bahamas. Why? Like, why is this allowed? Why is this allowed? How did this happen? Um, and why was there no due diligence done by these people? There's something called the DARE Act. I want to point people to DARE Act in the Bahamas. This act has really allowed all of this stuff to flourish. And Jean Chalopin went on a different podcast. Honestly, the podcast's name, I'm blanking on it. Otherwise, I would name it. But he went on another podcast and he said, like, I helped the Bahamas, like, instate the DARE Act. Like, I helped get FTX and Alameda here. So these guys work a lot with these government officials. This is a huge, important part of the Bahamas economy still. And I don't know. I expect there to be serious fallout that we haven't seen regarding all of that yet.
Yes. I Before we close this out, I want to emphasize that I expect the banking and payments processing angle for how FTX, Alameda, and I think we're even going to see FTX US end up implicating this. How those three groups moved money is going to be one of the most important parts of this story. And I think it is inevitable that story is going to touch on Deltec and that story is going to touch on Tether. As was discussed in the Tether papers, Alameda Research was the largest single issuer of Tethers. And Tether, even again, recently reiterated and reclaimed that those were dollars that Tether received and then issued Tethers for. And so that is a serious claim from Tether because that means there was 36 point, and this was at November of last year. And so it's actually probably in excess of $40 billion in total of US dollars moved through the banking system from Alameda to an account in Tether's name, and then those tethers were issued, and then those dollars went somewhere, and those tethers went somewhere, and both parts of that are going to be an important piece of how this money moved, as will Moonstone, as will Goldfield's money and HiveEx, as will the weird web of payment processors, foreign exchange shell companies, and other things that was used by FTX and Alameda Research to move money around the globe.
We're calling it Four Arrows Research. There's a lot of reasons behind that. We're trying to make sure that the bankers like us. We're also just trying to get extra arrows in when we can. And yeah, we're starting Four Arrows Research. We're hoping to get $8 billion raised by really honestly the end of this month, if that's possible. We're trying to get a stake in the in FTX 2, and we're trying to
I'm an FTX Classic guy myself.
I understand that. I get it. But yeah, I think it's time for us to stake some FTX2 tokens and get ready to really build out our empire. So anyway, thanks everybody for
before we're allowed to get stoned.
Thanks for listening, everybody. Talk soon.